Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, March 28th, 2023. The craziness and the disjointed moves and the what I call pretty much heavy volatility, although it's not being registered via the VIX, but strong volatility on the moves themselves continues. The difficulty in putting an Elliott wave count on all of this continues. The zero DTE options and their high volatility and movement continues, i.e. today, the market began to sell off. The market did put in some solid downside, stopped just shy of the level where all the puts were gathering at 39.75 basis the ES. Stopped, reversed, and immediately headed back up and closed above 4,000. So we get this 20 S&P point rally, which is continuing in the after hours in the start of the Globex session. And it actually is just presenting a lot of confusion. And here's why, in my opinion, because we're still confronting a bond market that is selling, is moving lower, not continuing to move higher, which would suggest bond prices higher, yields lower, that the rates are coming down, that the yields are coming down on the bonds. That's going to be good for the market, et cetera, et cetera. We saw today the fact that the yields were coming down, rising, yields rising, and the bond prices coming down. They went after the tech stocks again because higher interest rates are not favorable to tech. But here we are. Rally up into the close, get it back to 4,000. Why? Because, as I've stated before, what it appears it's happening in our market, believe it or not, the options are the underlying. The futures markets and those ETFs based on the indexes are the derivatives. So it's amazing to kind of see this all play out. But that's kind of what's happening. When we look at all of the options, and again, in the ES, they've already taken off the expiration. But if we go over to the SPX, oops, wrong one. Go over to the SPX and take a look at quickly before they take these away. No, they did already. No, there they are. So we can see 39.70. There's still approximately about $30 premium in the future over the cash. This is the cash market. Where did it settle? 39.70. Where was the largest open interest? 39.70. Where was it for the puts? 39.60. So we had a little bit of a range there. Actually, 39.50. So again, 39.50 downside, 39.70 top side. Traded all day in between, right? See that? That's the high. There's the low, traded in between, and ended up closing at the high. That's where they all wanted it. Spiders, even more wild. 431,000 at the 396 strike. Now, mind you, in the spiders, we have them every dollar. Strike prices, every dollar. 374, 5, 6, 7, 8, all the way up. 400 still all the way up, every dollar. So this thing can really get pushed around quick. What was this today? But here we have $3 range. Okay, low to high. And it closes on the high. And they continue to bid it up. Oh, now actually they're bringing it back down. 431,000 options contracts. That's a lot. It's an incredible amount. So we're seeing this across the board. One last one. Look at the Qs. This is the NASDAQ 100. So again, the NASDAQ 100, we've got the NQ options. We also have MDX options. They do not trade as heavily as this puppy. So we have the Qs, which is the NASDAQ 100, but it's an ETF. ETFs we know are in control of our markets. People don't choose individual stocks anymore. They just give the money to an ETF money manager, an asset manager. Let them divide it up and put it in to where it needs to go. That money supply seems endless because these trade and trade and trade. So here we are, 307. A little bit wider market today, $3.5 But where did it close? 307. Where's all the volume? 307. So again, when you're working through your day and you're just looking at this, you're going to kind of get an idea, where do I think they're going to close it? I mean, you start to figure it out. Well, my puts are 305, my calls are 307, somewhere in between. So if you're working a position that's got an associate like the SQs or the TQs, now you're going to be able to start to figure out where you think you're going to get your close. If that's the case, or if you're trading in the options, where you're going to get your close, or if you're trading in the futures market, you're going to see as they pull this thing up. I mean, the NASDAQ was down pretty solid all day, and it ends up on the day. Or the NDX, I should say, was pretty solidly down. This just moved up and now is still working its way higher as everybody has to settle out and get the futures. So again, a lot going on. And it's not making our trading in terms of swing and position trading any easier. I'm continuing to just encourage or just to tell people, it's like as a day trader, and believe me, I was an options market maker for many years. I know carrying positions. I know about volatility. I know how these things affect each other. That's basically why I stopped carrying positions overnight, because I was tired of that overnight fall. And I went to day trading. You get to come in fresh every day. Don't carry a position overnight. And that seems to work out because that allows me to play every little move that I can. And there are enough signal givers where you can get yourself in. These were great moves. This is an hourly chart. I can bring this down to the 15-minute chart, open this guy up. Nice moves. All right. This is 2 o'clock. 1, 2, 3, 4, 5. That's an hour and 15 minutes that we went up. Yep, there were downsides, but basically went up. Had one 15-minute bar going down and flipped to going up. 1, 2, 3, right into the bell. 45 minutes of just buying. You just jump on. You go for the ride. This was magnificent to trade. This was solid, at the market selling by somebody or something. You just catch it and you move. Your signals will be present. You have to know how to read them, and you just kind of go with it. Now, back over to the count. I'm actually leaving it where it is because to start switching it around, it presents too many problems. I need more information from the market. But what I can say was the possibility here is that what we've done is this too is going to get stretched out even further. So I can maybe leave this as wave 1, ABC2, or ABC, and then ABCX, and then we get another ABC. So this would get moved. Now, if that's the case, what's our potential for the upside? I'm going to put on my I don't want that one. I just got to go this way. There to that high to that low. Now we got an estimate. We've got an estimate for what the second ABC should look like. So if this is the X wave, that's where my starting point for the second ABC. This is pretty much the width of it. So, right, because there's my A, there's the B, there's the C, that all comes in. So now I can put this here, and now here's my numbers. What can we look for? Well, already we've kind of come to the absolute bare ass minimum, 4,003. Then we have 4,017, 4,029, 4,041, 618, 4,045. That seems to go pretty well, where the second ABC would be equal to 0.618 of the first ABC. That kind of fits. There's that. 4049, 4057. I definitely still don't want to see it. This wave 2 go above where this wave 1 started, and that's 4074. But it's got plenty of room to get up into any of this. Now, conversely, if this is 1, 2, and this is 1, 2, 3, 4, 5 of 3 and a 4, it's already overlapping, but it could just all be really crazy. Right? To counting the internals is creating nightmares. I'm losing sleep over it, so to speak, because even though this was during the night, and this was the activity of our regular session yesterday, and here we are starting again. Once Europe opens, we get a lot more activity. But to count this, I almost feel like I should take this out. So this is 1, 2, 1, 2, 3, 4, 5, 3, 4, too big. But maybe I need to allow it. 1, A, B, C, A, B, C, 1. I don't know. So there's a lot of combinations. I need more information from the market, and it's the market that's going to tell me. So right now, we need to be prepared for either side. And I know that's going to present a lot of problems for swing traders, for position traders, because it's how do you want to position against what actually nobody's actually able to tell you. I can give you estimates, I can give you thoughts, but to say definitively what the market's going to do tomorrow, somebody else is going to say, oh, yeah, it's going to go up. Oh, yeah, it's going to do this. Oh, yeah, it's going to do that because this, and that. None of that's concrete, folks. We have no evidence that the Fed is even considering easing. But you got people out saying that that's what they got to do. That's what they need to do. That's what they should do. That sells airtime, but it doesn't help position, nor does it put anything concrete out there to say this is what the Fed is going to do. So we're in the same boat. Confusion. The interest rate market, the treasuries are signaling that rates are going up. The yields on these bonds are going up. They're not declining. They're increasing. That's not good for the tech sector. We saw that today. The 30-year bond and the 2-year note have dropped from their highs pretty strongly back down. That's not good for the tech sector. Higher interest rates, not good for the tech sector. Believe it or not, they're big borrowers. So that's what got crushed today. They're not letting up. They're still moving lower. If we get up tomorrow and these bonds are down, like the 30-year note, if it's down another point, that's spelling danger. Do you really want to buy this? But they're not doing it based on anything that we need to function under. What's going to happen to interest rates? They're in a 0 days to expiration mode. Whatever happens, they buy it and close it, and either it's exercised or it's a dumb position, all in one day. They have no risk outside of that. That's what's in control of our markets right now. How do we want to position ourselves against that? Until those players are ready to lower the bar, we won't continue to move lower, because every day they don't get it low enough where to rally back isn't taking it all the way back to 4,000. So until we start to see those numbers, those strike prices start to shift around, we're going to be in the same place. So I need more information from the market. So for tomorrow, for tomorrow. Here's our resistance levels. We already know that they're able to do quite a bit. Take it down 20 and then take it back up to unchanged to slightly higher. Could we do it again tomorrow? We sure can. Take it up overnight, bring it down, finish it up. Wherever we find the largest number in the puts and the calls, that gives us the range that the market's likely to move in. Over in the NASDAQ, it is the same story, except slightly different. Why? Because we actually did get a sell-off today in the NASDAQ. It was a nice one, and it followed a nice pattern. So here we have minuet 1, subs, ABC, minuet 2, and then we start down. 1, 2, 3, 4, 5. Sub minuet wave 1 of minuet wave 3. We're looking for a wave 2 correction. Let me, I got a lot of fibs on there. I'm just going to take them off for the moment so that we can take a peek what we might need for upside. All right. If I'm looking for a small wave 2, I hate saying that because it seems that we just keep going from wave 1s to wave 2s, from wave 1s to wave 2s. And here we are again, a wave 1 to a wave 2. Oops. Did that wrong. Let me just change that back to that one, please. And there we go. So 382 is 12,768. Boy, we saw that number a lot today. Guess what else is right there? The 200 SMA. We had everything starting to turn and roll today. Here is the 200 EMA right there at 21. So we're above it. We've got the 20 starting to turn. We got the 50 starting to turn. We got the 4 and the 8 hooking as it should with the rally. So what are we looking for? If this is a wave 2, we know the most common fibs are 50 to 618. Believe it or not, folks, it takes us back to 12,809 to 12,850. Wow, here we go again. Back up only to bring it back down, and it should be an ABC. So ABC, that's what we're looking for. Those are our levels. Now, if it just gets up to here and suddenly turns and starts to drop, then I'm going to be looking for, again, something way different, right? I'm looking for continuation, and we're dropping in the third. Mind you, it is a third of a minuet wave 3, which is part of a minute wave 3, which is part of a minor wave 3. So we got a lot of 1, 2, 1, 2, 1, 2s. And it's all going to catch up. They're starting to here. So if we get another decent day where they take down the tech, I'm going to be looking for that to crest and to continue to drop. What can I look for? First one I'm going to put in, I'm going to change this over now, back to my extensions, and I'm going to go from here to here to here. Now we have extensions coming off. So if wave 3 is going to be equal to wave 1, that's right here at 12,580. Well, it's looking pretty much that should go a lot further than that. I'm going to drop it down to our 1.618, 12,330. So 12,330. So again, as we try to work our way down, we're still hanging out above 12,000. My bigger picture tells me this thing needs to get underneath 12,000 as quick as it possibly can. So overall, right, inside this minuet wave 3, we should be able to do that. The whole thing should bring us down almost. So we get that 3, a 4, and a 5, and that'll finish our, actually, I'm a little bit wrong on this count. This might be the minutes. In any case, it's going to be a third. And I'm still looking for all of these levels here. So 12,330 to finish the third, we get a 4 and a 5. And then that might just finish the minute wave 1. And then we get a 2, again a 2. So yeah, that's how I'm counting it. Instead of minute 1, 2, which it could be. In that case, I could change this, and I may do that overnight, but let's just leave it the way it is in terms of degree and understand what the intention of the move is. So for this third that's maybe coming into play, once this 2 is over, I can add another layer, but right now we're looking for that third to maybe get down to here, maybe down to here, 12,300-ish, and then putting in a little bit of a rally and then decline yet again. It is confusing. It definitively is confusing. Tomorrow, we have a few things on Wednesday, pending U.S. home sales. That's it. And Fed Governor Barr, who's over in the Senate today, is going over to the House tomorrow. But it was kind of like just, old boys week. Everybody just chit-chatting away. So in any case, I am going to finish it up there. And our next update will be on Wednesday, March the 29th.